Hello everyone, and thank you for joining us for this P1 Success exam-specific tips and techniques webinar. We're delighted to be joined by Tom Marlowe, tutor from Astranti. Before I hand over to Tom, there are a few points I would like to make. To minimize disruption, you have all automatically been muted. If you do have any questions, please pop them in the questions box, as there will be a short Q&A session at the end of the webinar. Following this session, you'll be sent a copy of the presentation and a recording of the webinar. So without further ado, I'll now hand over to Tom.
Hello and welcome to this P1 Exam Specific Techniques webinar. So in today's session, I'm going to start by giving a quick word on the pass rates for the operational level tests. And then after that, I'll be going through some exam specific techniques for some topics within P1 that people tend to find more challenging. And then I'll be rounding things off with a Q&A. So feel free to ask questions throughout this webinar. So the reason I'm going to have a quick word about the pass rates is that actually when it comes to the operational level for CIMA, so that is E1, F1 and P1, it's actually P1 that has the lowest pass rate. However, I don't think that it actually has to be this way. There's a lot of maths and mathsy style topics in P1, and this can be quite intimidating and people can find it quite off-putting. But if you actually break down the topics and if you think each question through, then the questions actually can't be often aren't as daunting as they may initially appear. So that's going to be the goal of this webinar, to break down some more mathematically inclined P1 questions, and then hopefully by doing that demonstrate that they are doable, they're not as bad as they seem, and hopefully boost this 54% figure going forward. So for our first exam style question, I'll be talking through an example of reconciling profits between the marginal and absorption costing systems. So in terms of the question, we've got a fictional company, of course, that is manufacturing bike computers. And these bike computers sell for £90 per unit. And we're told that the variable production cost per unit is £32. And the company currently uses absorption costing. Additionally, we're told that the fixed production overheads in the period were £173,250, and this was in line perfectly with the budgeted figure. When it comes to the company's approach to absorbing these costs, it's on the basis of the number of units produced. Excuse my quite thick highlighter.
Sorry, Tom,
Yeah.
We can't see your presentation. Did you accept? Did you click share my screen? Show my screen.
Oh, sorry about that. It didn't pop up. Okay, sorry, I've actually been highlighting. I'll scroll back to the slide with the pass rates first to show you that I was in fact highlighting things. So I'm really sorry.
Thank you very much. Yeah, we can see that now. Thank you.
Okay, so I use my laser pointer here. So we have E1, F1, and P1. We can see that the E1 pass rate was 81%, F1 79, and then P1 a lot lower at 54. So that's just to reinforce the point that currently people, at least going by the pass rates, people currently seem to find that the most challenging of the three different modules, the three different syllabuses. However, again, I think if we can break down some of the mathematical concepts, we can hopefully see a boost to this 54%. So just to give a quick recap on the question I've been going through. So there was a question on screen. So the bike computers, selling price £90 each, variable production cost £32 each, fixed production overheads £173,250, and absorbed on a per unit basis. So production in the period was 10,500 units as budgeted, and there was no opening inventory. When it came to the closing inventory or the closing stock, there were 2,000 units. So closing stock has increased by 2,000. So what the question is actually asking us to do is to calculate the difference in the profit for the period if WattageCore had used marginal costing rather than absorption costing. So all we're being asked to do is to reconcile the profits between these two costing systems. So before I jump right into the calculations, let's take a moment to consider why these two profit systems actually come up with different profits in the first place. Well, broadly speaking, profits can just be thought of an organization's revenue less its costs. So nothing too crazy there. But that means that there are two different possible ways a difference in profit could arise. That is, revenue could be calculated differently, or costs could be calculated differently. And in our case, the reason why the profit differs is because of costs. So why do the costs differ, or the costs calculated in a given period? Well, the difference is to do with the way the two different costing systems value inventory. Inventory is valued in a different way under absorption costing and under marginal costing. So what's the nature of this difference? Well, under marginal costing, we only look at the variable costs of producing each individual unit, and then we subtract the fixed production overheads as a period cost. Meanwhile, under absorption costing, we go a bit further and we actually include the fixed production overheads. I'll just write P.O, short for production overheads, to save me writing all of that out. So we include more costs in our inventory under absorption costing than we do under marginal costing. So in this way, we can conceive of inventory being seen as more valuable under absorption costing. That's just one way to think about it. So this means that if we have closing inventory, more costs are going to be carried forward under absorption costing than under marginal costing, thanks to this inclusion of fixed production overheads. So that is to say, at the end of a period, our inventory can go up or down. It can also remain the same, in which case there would be no profit difference between the costing systems. However, normally it's going to either go up or go down by the end of the period from the beginning of the period. And it's when the inventory does change that there is a change in profits between the two systems. And the rule for you to remember is that if inventory increases, then the absorption costing profit will be higher. So that's the first main rule for you to remember from this question. Now, when it comes to the second main thing that I want you to take away from this question is that there is actually a formula for calculating the difference in profits between the two systems. And that is the overhead absorption rate in units, which we'll calculate in a moment, multiply by the difference, diff short for difference, in inventory, INV short for inventory, is equal to the profit difference between the two systems. So if the difference in inventory is an increase in the inventory, multiply that by the overhead absorption rate, then this is the amount by which the profit is greater under an absorption costing system. So let's now relate these ideas back to the question that we have here. Well, we were told that the company had no opening inventory and 2,000 bike computers in closing stock. That is its closing inventory. Therefore, the inventory has increased during this period, and therefore absorption costing will show the greater profit. And how much did inventory increase by? Well, 2,000 units. So what about the overhead absorption rate? Well, we were told that the fixed production overheads in the period were £173,250 and absorbed on the basis of the number of units produced, which is 10,500 units. So 173,250 divided by 10,500, the fixed production overheads per unit. So this comes to £16.50. So I'll write that down here. And this comes to £33,000. So all we've done in this calculation here is we've found the fixed production overhead per unit that's been absorbed per unit. Now remember, the difference between the marginal and the absorption costing profit systems is that it's absorption that includes the fixed production overheads. And it's this extra cost that absorption costing considers on a per unit basis that means that inventory is considered more valuable. So 2,000 units in inventory minus the £16.50 extra per unit cost considered in that inventory means £33,000 extra profit excuse me, under an absorption costing system. Now, returning to our question, remember it's extremely important for you to read every detail of the question when it comes to your exam. We're told to look at the difference in the profit if the company had used marginal instead of absorption costing. So if it had used marginal instead of absorption costing, then profit would be lower, and it would be, as we've calculated, £33,000 lower, and I'll use a negative sign to denote a decrease in the profit. So in summary, inventory has increased, absorption costing profit is higher. We've determined that it's higher by £33,000. Therefore, under marginal costing, the profit will be £33,000 lower. So this brings us to the end of our first question. So let's now move on to question 2. So for question 2, we're going to be looking at break-even analysis. So this is to do with looking at the ways that we consider the costs we incur by producing a product, the sales price that we sell for that product, the forecast sales that we hope to make, and then by doing that, we look to see if we're actually going to make a profit on those sales. So our company this time around is called Diving Visibility Incorporated, and the only product it makes is masks. The selling price for a mask is £65, and the total variable cost per mask is £45.50. We're told that the company has total fixed costs of £24,999, and it expects to sell 1,800 masks in the next period. Now, what we're being asked to do is calculate the impact that a 5% decrease in the selling price of the masks would have on the margin of safety in units. And then we need to give our answer in terms of units. So a lot of different concepts going on here. First of all, the concept of the break-even point, and then the concept of the margin of safety. So the break-even point is the number of sales at which 0 profit is made, and also 0 loss. That's what breaking even is, making neither a profit nor a loss. Now, the margin of safety, which I'll write MOS for short, is how far we are above the break-even point. So we can think of it as the more sales we expect to make, or the more revenue we expect to earn, I should say, then the safer we can feel in that we are further away from the break-even point. So to answer this question, we're first going to have to find the current break-even point given the costing and pricing information we are given in the question. Then we have to find the margin of safety, and then we have to do the same calculations after that 5% price decrease. So how do we find the break-even point? Well, we have to determine how many units would need to be sold to cover all of the costs of the company, both the variable costs and the fixed costs. So if a mask costs £65 per unit and the variable cost of producing a mask is £45.50, that means for every single mask we make, we earn a contribution of £19.50. So £19.50 contribution per mask, fixed costs of £24,999. All we have to do is divide £24,999 by £19.50 to determine how many units we would have to sell, earning contribution on each of those units before we covered those fixed costs. So 24,999 divided by £19.50 is equal to 1,282 masks. So speaking in general, the formula you need to know for your exam is break even is the contribution, that is the contribution per unit. Oh, excuse me, it's the fixed costs divided by the contribution per unit. I'm still thinking about contribution now. Yeah. So that's the break-even point in units. So now that we've found the break-even point in units, the next thing to do is to find the margin of safety. Well, we're told that the company expects to sell 1,800 masks in the period. So how far above the break-even point is this figure? Well, 1,800 minus 1,282, which remember we calculated as the break-even point in units, gives us 518 masks, 518 units as our margin of safety. So how do things change if the selling price of the masks decreases by 5%? Well, in order to calculate a 5% decrease in general, we multiply by 0.95. So 0.95 multiplied by £65 is equal to £61.75. So this is the new selling price of the masks. Now, contribution is the selling price minus the variable cost. So the contribution will have fallen as a result of the selling price falling. So let's now recalculate our contribution. £61.75 minus £45.50. Remember, it's only the selling price that has changed, not the total variable cost per mask. So after the fall in the selling price, the new contribution is going to be £16.25. £16.25. So now we just have to repeat our break-even calculation. So £24,999 divided by £16.25 gives us a new break-even point of 1,539 units. Now, a quick point that I'd like to make. If you're following these calculations along by yourself, you might have noticed that I have actually rounded this up. So, excuse me. So if I looked, so I'm just calculating to find the precise decimal. So it's 1,538.4. Now the reason I've rounded it up is that, remember, we can't sell a fraction of a mask. So if we were to round down 1,538.4, like we normally would in other areas of maths, then this would actually take us to a number of sales slightly below which was necessary to break even. We'd actually have to sell a whole additional mask in order to break even. So the minimum sales volume of mask that we can sell and cover all of our costs following the price reduction is 1,539 and not 1,538. So remember that for break-even calculations you do in your exam. Even though you might normally want to round down, you should in fact round up. So a key area to avoid slipping up on that. So in terms of our new margin of safety, 1,539 minus 1,282, which remember was our original break-even point, gives us a new margin of safety of 257 masks. So originally our margin of safety was 518, and now it's gone all the way down to 257. So 518 minus 257 is 261 masks less than we expect to sell. So 261 masks less in terms of our new margin of safety. And we denote this decrease in the margin of safety with a negative sign. So what's happened? Well, first of all, to cover our fixed costs at the original selling price, we had to sell 1,282 masks. However, we expected to sell more at 1,800 masks. After the selling price fell, our contribution per unit fell, which meant that we had to sell a greater number in order to break even. This brought us closer to the break-even point, and therefore oh, sorry, I've done the wrong. Oh, I'm really sorry about that. I performed the wrong calculation. Okay. So I apologize for that. So let me go through what I did wrong, and then I'll talk about how we can correct the mistake. So I calculated the difference in the margin of safety. So initially, we expected to sell 1,800 masks. The break-even point was 1,282 masks. So we were 582 masks above the break-even point. Now that the selling price of the masks has fallen, this means that the contribution per unit has fallen, meaning that the break-even point has risen. So given that we expect to sell 1,800 masks in the period, 1,800 units minus 1,539, that gives us 261 as our new margin of safety. So our margin of safety was originally 518, it's now 261. So that is a fall in the margin of safety of 257 masks. I'm really sorry about the confusion. I've confused myself. But the point is, contribution has fallen, the number of masks required to break even has risen, and therefore the break-even point compared to our expected sales is now closer, and it is 257 masks closer. So let's now move on to question 3. And in question 3, we talk about variances. So specifically, we're going to be looking at labor variances. So for question 3, the standard labor hours per unit to produce a sweater is 15. The labor has a standard cost of £15.15 per hour. At the end of the period, 1,500 sweaters, that is the budgeted quantity, were produced and sold, and a total of 26,500 labor hours were worked in the period at a cost of £411,000. And using this information, we're expected to calculate the direct labor efficiency variance. So when it comes to labor variances, then we can think of, first of all, the total labor variance. So all this is the difference between the amount we expected to spend on labor and the amount that we actually spent on labor in the relevant period. Now we can actually break down the total labor variance into two parts, that is the efficiency and the rate variances. And the reason for this is because there are two key reasons why the total amount we spent on labor in the budget and that we spent in actuality might differ. So the first reason is an increase in the labor rate. So that is an increase in the cost of the labor. Say the cost of the labor hours, so a wage increase, for instance. And of course, the opposite is also true. If the labor rate fell, if wages fell, then the cost of the labor would of course reduce, a reduction in the labor rate variance, and therefore a reduction in the total labor variances. The other reason is to do with efficiency. That is, given the number of labor hours, were we able to produce more units of the product than we expected to, or fewer units? If we're able to produce more units if we took less time to produce the units of the product, then this will of course be cheaper for us. So we're looking at the efficiency variance in this case. So we're going to be judging the efficiency of the people who made our sweaters. So in order to see how all of these variances work together, let's go through each of these one by one. Now, you won't be going through all of the variances in your exam. You're only going to be focused on the one the question is asking you about. But for the purposes of teaching, it's probably better to look at how the whole system all interrelates. So let's now consider the total labor cost that we expected to spend on these sweaters. So 15 standard labour hours to produce a sweater. Each labour hour standardly costs £15.50, and we expect to produce 1,800 sweaters. So 15 multiplied by £15.50 multiplied by 1,800 is equal to £418,500. So if we look to this figure, we can see that we actually expected to spend a lot more than we actually spent in the period. In fact, we spent £7,500 less. So that is a favourable variance. It's a good thing for us to spend less than we expected, so £7,500 favourable. And this is our total labour variance. So let's now look at which parts of this £7,500 were due to the labour rate and which were to do with efficiency. Well, in terms of the cost of our labour hours, we were told that 26,500 hours were worked in the period. So 26,500, and given that the standard cost of labour is £15.50, this means that the standard cost of those labour hours was £410,750. However, remember, it actually cost more. It actually cost £411,000. So £411,000 is £250 greater than the amount we expected to spend. So that is £250 adverse for this variance, £250 more than we expected to. However, notice that the overall variance is favourable, and therefore we must have been more efficient than we expected to be, and specifically £7,250 more efficient. So how do we calculate the efficiency variance? Well, remember that 1,800 sweaters should have taken 15 labour hours each. So it should have taken 1,800 multiplied by 15 is equal to 27,000 hours. However, only 26,500 hours were actually worked in the period. So that's 500 hours that we've saved by being more efficient sweater makers, which is obviously a good thing. So how much money is those 500 hours worth? Well, we can value it according to the standard cost of labour, which is £15.50. So 500 multiplied by £15.50 is equal to 7,750. So I'll write that more clearly, 7,750, and that is favourable. So £7,750 favourable minus £250 adverse is equal to £7,500 favourable overall. So we can see that our answer is C. So even though on terms of our labour efficiency, we saved £7,750, we actually lost £250 because our labour cost more than we thought it would. So between the improved efficiency and the less good cost of labour hours, this means that overall we saved £7,500 on labour compared to our budget. So hopefully by this you can see how all the variances work together, and also how the efficiency variance is calculated, looking at the standard hours, comparing them to the actual hours, and then valuing the difference according to the standard cost of labour. So moving on to question 4. So for question 4, we're going to be looking at linear programming. So linear programming is all about optimization under constraint. So when it comes to actually performing linear programming in your CIMA exam, you could be asked to do a number of different things. However, for the purposes of this webinar, I'm going to be focused on what's called preparing inputs for linear programming. And the reason I focused on this is because I think linear programming in general is something that's seen as quite off-putting for the CIMA syllabus, but actually, arguably, perhaps when it comes to preparing inputs for linear programming, I think this could potentially be an area of easy marks, and potentially easy marks that are often missed. So hopefully by the end of this, you'll be able to pick up those easy marks yourself. So we're told that a company manufactures 2 products, C and D, and we're given some information about the costs, the overheads, and the selling price in relation to these products, which we'll be coming back to in a moment. Now, I mentioned linear programming being about optimization under constraint. So in the next sentence, we're told a bit about the constraints in question. So that is that company L has a maximum of 3,000 kilos of material and 3,500 labor hours available in the next period. So it wants to maximize its contribution each month and wants to optimize its production plan to make sure that it does actually achieve this aim. So when it comes to maximizing contribution, we might think, well, the best thing to do is to make as much as possible of our product, sell it, and then we'll get as much contribution as we possibly can in that way. However, we only have 3,000 kilos of material and 3,000 labor hours available. And if we look to our products, we can see that they use different amounts of material, different amounts of labor, and they also sell for different amounts as well. So it's not immediately obvious to what extent we should prioritize the production of these products. So in order to determine how we should actually go about maximizing these products, what we need to do is actually explain these constraints alongside the requirements for both of our products in the form of some algebra. And when it comes to preparing the inputs for linear programming, this is all this is. So let's go through each of these ideas and I'll discuss what they mean and then how we can arrive at the answer. So I'll leave the objective function for a moment because at the moment we're just talking about these inputs. I'll come back to it though. So the correct input for material cost is blank. So when it comes, well, that should be the correct input for material availability is blank. So, okay, sorry, what am I? The correct input for material cost is blank. No, sorry, it is the, excuse me, I'm confusing myself now. The correct input for material cost. So when it comes to the material cost for product C, we can see that the material cost is £45 per unit. And when it comes to D, then the material cost is £60 per unit of material. I see where I've gone wrong. I wrote this question intending it to be asking about the availability of material. So that's the correct input for material in kilograms. So what I've done is accidentally wrote that option in a way that related to the expense of the material, but in terms of the constraint is given in terms of the quantity and not the expense of material. So I'll explain what this means now. So given that the material cost for C is £45 and for D it is £60. Now because the materials are valued at £15 per kilogram, we can deduce how much material is required for producing each unit of these products. That is £45 divided by 3 is equal to 15. Oh, sorry. Divided by 15 is equal to 3 kilograms. Meanwhile, £60 divided by £15 per kilogram is equal to 4 kilograms per unit. So it's just the amount of material necessary to produce each unit of our products deduced from the cost in total and the cost per unit. 60 divided by 15 is 4, 45 divided by 15 is 3. So now we know how much material is necessary to produce each of our products. Now in total, we have 3,000 kilos of material. So in terms of our linear programming inputs, we need to talk about what inputs are possible given this constraint on available material. So given that each unit of C requires 3 kilograms, then 3 kilograms multiplied by the unit of C is equal to the amount of material dedicated to producing C only. And the same logic applies for D. 4 kilograms multiplied by D is the quantity for producing D. Now these are our only two products. So no matter what combination of outputs of these two products we produce, it must come to less than or equal to 3,000 kilograms. So less than or equal to 3,000. So we could focus entirely on producing C and produce no D. We could do the opposite, or we could produce anything that satisfies this inequality. And the inequality, this open side, faces towards the number that these must be less than. So looking to our options, we can see that 3C plus 4D is less than or equal to 3,000. Now the same logic will apply to our labour hours. So given that labour is £9 per hour, £18 is our cost for C and 27 is our cost for D. This means that it is 2 labour hours for C and 3 for D. So given that we have 3,500 labour hours available in the period, then this must mean that 2 labour hours multiplied by the quantity of C plus 3 labour hours multiplied by the quantity for D is the absolute most that we can possibly produce. If every unit of C takes 2 hours and every unit of D takes 3, then no matter how we allocate it, it must satisfy this constraint. It must satisfy this inequality here. So this is our second correct input. So all we're doing is expressing the limitation we have on the available labour hours in terms of units produced of our product. Now lastly, we have the objective function. So the objective function is the way we express our actual goal. So in our case, the objective is to maximize our contribution. So in order to maximize our contribution, in order to determine how much contribution we're actually making, we multiply the contribution per unit by the number of units that we sell. So in order to determine the contribution per unit, we take the selling price and then subtract all of these costs. So 250 for C, and for D it is 375. So we subtract the material cost, the labour cost, and the variable overheads, and then do this twice. So in order to do this for C, I'll just do that calculation now. 250 minus 45 minus 18 minus 4 is equal to £183. And then repeating for D, 375 minus 60 minus 27 minus 5 is equal to 283. So to figure out the total contribution that we're going to get, we multiply 183 by C and then add this to 283 times D. And this is our objective function. So in the language of linear programming, the company is aiming to maximize its contribution and therefore maximize its objective function. It wants to set an output that satisfies these constraints, that is possible given the resources it has available, and then make sure that whatever output this is makes this function the biggest. So we are trying to get the most contribution we can given the resources we have available. So let's now move on to question 5. So for question 5, we're going to be performing a high-low analysis. So Comfy Neoprene, our company, manufactures wetsuits, and we're given information regarding the number of wetsuits it has manufactured in the past and the total costs associated with doing so. And we've been asked to forecast the company's total costs for manufacturing 8,500 wetsuits. So what the high-low method does is that it takes the periods of highest and lowest activity, extrapolates between them in order to determine the company's fixed costs and variable costs. And then based on these historical costs, we can then forecast costs for activity levels that we haven't previously undertaken in the past. Now, crucially for the high-low method, when we talk about high and low in the high-low method, we are looking at the highest and lowest activity. So not the highest and lowest total cost, but the highest and lowest activity, the number of units being produced. So looking at this company, we can see that the period of highest activity was in 20x1 quarter 1, and the period of lowest activity was in 20x0 quarter 4. So in order to determine the variable costs through the high-low method, we use the following formula. We divide the difference in the total costs for those two periods by the difference in the activity levels. So looking to our figures, we take the difference in total costs, which is 453,000 minus 229,000, which is 224,000, and then divide that by the difference in the activity level, 8,200 minus 2,600. Oops. So that's not a pound sign. So 8,200 minus 2,600, which gives us 5,600, which gives us £40 per unit of variable costs. So the reason why this works is because we're just averaging out our variable costs based on the difference in the cost per unit, as we assume that the rise in costs between these two periods have chiefly occurred because of the difference in the variable costs. So if our variable costs are £40 per unit, what about our fixed costs? Well, to determine our fixed costs, we'll take this period of high activity, so 8,200 units, calculate the total variable costs for that period, given the cost per unit figure that we've just calculated, so 8,200 multiplied by 40. So this gives us 328,000. Well, my pen isn't working. So £328,000, and then we subtract this variable costs from the total costs. So I'll write 453 just for short, so that's in thousands, minus 328 is equal to £125,000. So these are our fixed costs. So in order to forecast the costs, then all we have to do is take our fixed costs plus the total variable costs. So £125,000 plus 8,500. This is our desired forecast amount, 8,500, multiplied by the variable cost per unit. So this gives us £465,000. So all we've done is extrapolate the costs, the total costs of producing this previously. So all we've done is extrapolate the total costs of producing an activity level that we've previously not hit in the past, based on the difference in the total costs from our highest and lowest activity periods. So by doing this, we've been able to infer or approximate our variable cost per unit and also our fixed costs. So with the variable cost per unit and the fixed costs, we're able to forecast any given desired quantity of output. The downsides of this, of course, is that we don't actually know how the cost structure will behave beyond the number of units that we've produced in the past. For example, if we have some form of stepped fixed costs, for instance, that occur outside of the historical levels of production, then this would not be accounted for in the high-low method. All it is an approximation based on historical figures, and it assumes that the future will mirror the past with regards to costing. However, it is a good way to estimate, and the formula that you need to remember is the variable costs per unit are equal to the difference in the total costs divided by the difference in activity levels at the periods of highest and lowest activity. So a quick word on exam technique. So there are 60 questions in the exam and 90 minutes. So that does give an average of 1.5 minutes per question, so not much time to waste, and efficiency is key. However, rather than try to dedicate 1.5 minutes per question, it's actually best, I'd recommend, to skim through the questions, answer the easier ones or the ones you think are going to be easier, and then flag up the ones for review that you think are going to be more difficult. So in that way, you spend less than 1.5 minutes on the easy ones, then at the end, you can divide your remaining time, which hopefully will be more than 1.5 minutes per question, between the more difficult questions. So depending on how much time you have available. Now, in terms of guessing, well, answer everything. There is no negative marking in a CIMA exam. And of course, answering a question, if it's 4 options for your question, then it's a 25% chance that you'll be getting that mark. So make sure that you really do answer everything. So if all else fails, make sure you put a guess because you never know. So flag and review, try to manage your time in the exam by answering these simple questions first and then coming back to those more difficult ones at the end, where hopefully you'll be able to dedicate more time to them. So those are my key tips for exam technique. Now, I'm aware that I'm short of time, so apologies for sort of rushing through that section quite quickly, but I'll now be able to take any questions that anybody might have raised through the course of that presentation. So I'll put that onto my any questions slide.
Okay. Sorry, I'm just looking through. So one of the questions is, in the exam, there were 2/3 theory questions versus mathematical. How best can we prepare for theory?
I think theory is just a case of going through the study text and just making sure that you really memorize those key points, really. That changes to, it tends to be a bit less, require a bit less thinking on the day than those mathematical questions, at least in my opinion. So just make sure you dedicate the time to really memorizing those topics and that content.
Okay, can you please explain how to treat the over and under absorption figures while calculating different profits to marginal and absorption costing?
Well, I think that's an extension of the material I covered here. So I don't think I could give that a fair treatment in the time I have available. But if they'd like to post that question on our forum, then I can definitely get back to them on that. So
no problem. Are there any multiple part questions, or is every question independent?
So do they mean when there's like one set of materials that relates to multiple questions?
I'm not too sure. Yes, he said yes.
Okay, yeah, those do come up. But again, I don't think they impact on the difficulty of the question necessarily, or the way you should prepare for them. But yeah, I think there are duplicate materials that multiple questions are asked about, as with certificate level exams, so far as I know.
No problem. How does the step cost work, as we get questions on this in the exam for the high-low method?
They don't. Basically, the step costs. So the step costs will be there'll be a level of fixed costs, and then a certain activity level is reached here, and then the cost will jump up like that. So that is the general idea behind a step cost. But I'd be very surprised if you were asked to incorporate a consideration of step costs into a high-low calculation. You could divide it into 2 high-low calculations. So a high-low before the step cost increased, and then a high-low after that increase. So that would be 2 levels of fixed costs if you had to, but again, I'd be surprised if that were to occur. So divide it into 2 would be my advice there, if necessary. So you'd have to perform 2 high-low analyses. But yeah, I call that a weakness of high-low more generally.
And what would you say the best way to approach revision is?
Like in general?
I think so, not too sure.
I mean, my general overarching advice for revision is to make sure that your revision process is very active. So at least in my own revision for exams that I've done in the past, my tendency is to sort of gravitate towards more passive modes of revision, watching lectures and that kind of thing. That can be very tempting, very easy. But when it comes to things that I remembered better, it would always be when I forced myself to sit down and do practice questions or set myself practice questions, make my own notes. Flashcards as well. Making flashcards can be a really good way as well. But the underlying theme is that the more engaged you are with rewriting or applying the revision material into a new format in your own way, then the more that material is going to stick, the more you're involved with manipulating that material in whatever way, again, whether that be flashcards or mocks or whatever else, it'll tend to stick a lot better than spending a lot of time maybe reading a study text or highlighting that study text alone. That should be part of your revision, but probably not the main part. Active revision would be my major tip.
Do you know if there's any quick way to remember absorption or marginal costing?
A quick way to remember like the key differences, or a quick way to, or just like what they are, like the definitions. When it comes,
sorry, I'm just waiting to see if she expands. That's all.
I just want to tailor my answer to hopefully.
Differences. The
differences. Okay. I think that just the word absorbed is, I don't know, that helps it stick for me. You can think maybe a sponge, like it absorbs all the available costs in that way. Whereas marginal, more broadly, like a marginal cost in economics, is the cost associated with producing one more unit. So that kind of links back to the idea of a variable cost. What would the cost be of producing one more unit? Those are going to be the variable costs. Whereas absorption is kind of the opposite in that we are trying to get the fixed overhead costs and then consider those on a per unit basis. So we're absorbing them in. And then the additional thing to remember is the fixed overheads being subtracted as a period cost when it comes to marginal costing. So the way to remember that would possibly be, well, if we're only considering the variable costs on a per unit basis, then we do need to consider the fixed production overheads at some stage. So we just take them off in the period that they apply to. So they're kind of an afterthought under the marginal costing system, for want of a better word. And it's because of that per unit basis. Under marginal costing, that means that costing system is better for kind of short-term decisions potentially. So yeah, divide it up between absorbing like a sponge as many costs as we can versus at the margins, again, really looking for that per unit basis for costing. So that would be my, it's not really a mnemonic, is it? But that would be the way I distinguish the two concepts. Sorry, it's not catchy.
Do you know how many theory questions will be in the exam?
Not off the top of my head, I'm afraid I don't.
Using break-even revenue or break-even point to calculate MOS, would that lead to the same result?
As in using break-even revenue rather than the break-even in units? Yeah, it would. I don't see why it wouldn't. It's just two ways of expressing the same idea, because we just multiply the number of units by the selling price, the relevant selling price in each case. So we'd get the margin of safety as a revenue figure.
Okay. How would sensitivity analysis be asked in P1 OT?
So that is changing one variable in a budget and then determining what the effect of that change would be on the ultimate profit or other figures in the rest of the budget. So yeah, that would be probably the main way. So you'd be given perhaps a selling price per unit in the budget, and then say what would the impact be on the profit of on the budgeted profit, for instance, for a 5% reduction in the sales price per unit. That would be one way I can imagine it being tested. So just on what would the impact be of this individual variable being changed? Won't be asked about multiple variables being changed there, I don't think. I'd be very surprised if that came up.
Okay, So one last question, when calculating marginal costing profit, the variable selling and admin costs are added before contribution or after, question mark.
So the admin costs, those are separate. So those aren't considered in contribution, they're separate to production. So they're taken off as a period cost as well, the admin costs.
Okay, that's perfect. Thank you very much, Tom, for your time. I'm just going to pop a survey link in the chat box. If everyone could give us their feedback, that would be fantastic. So that's just been popped in there now. Okay. In a few hours' time, you will all be sent a copy, a recording of this webinar, so you can look back over it, and which should help you. So apart from that, thank you very much and enjoy the rest of your day.
Thank you. Is it okay if I quickly plug these, this P1 masterclass and the free?
Yeah, sure, go for it.
Sure. So we've got an upcoming live P1 masterclass. So it'll comprise of 6 weeks of 2 hours of online classes. So it'll be interactive. You'll have the opportunity to get involved, ask whichever questions you'd like to. And the purchase of the masterclass course also includes the standard course as well. And if you use the code on screen now, P1 Masterclass 21, you'll receive £200 off the cost of the masterclasses. So that means the course with the masterclasses included will be the same as the cost of the standard course. And also, if you sign up for an account on Astranti.com now, you'll get a free complete mock exam for E1, P1 and F1, and also free access to the first week of our E1, P1 and F1 courses. So, but the code, the P1 Masterclass 21 code, does expire on midnight Thursday the 8th. So get in quick if you'd like to use that offer. So those are the main offers off the back of the webinar that I'd like to promote.
Perfect, no problem at all. Anything else?
Not for me, no, but thank you very much for attending. Thank you very much to everybody that's come. Thank you very much for your questions, and I hope you found this session really helpful. So thanks for attending on behalf of me and also on behalf of everyone here at Astranti.
Great, thank you very much. Have a good day, everyone.
Thank you, and you.